Good evening. Ira Epstein with your agriculture wrap-up, and this is for the evening of Wednesday, April Fool's Day, April 1st, 2020, about 5:45 p.m., and this is daylight time. As you take a look in the grain, you'll see the final prices, and remember, it's after 5, so we won't have the high and low here, but I'll show you that in a minute. But they all got hit. The meat markets, a number of them went limit down today. Grains threw in the towel, and part of it had to do with the big break in the stock market, which is getting a bounce tonight. You can see that. The question is, does it have any legs on the bounce? And that'll be the bigger question that everybody has. So let's take a look and see just where we're at. As you can see, this is where the market so far for the week is, and that's down 18 3/4 points. The pattern is bearish because you're under the 18-week moving average of closes, and overall you've got lower highs, lower lows, as you can see just on a closing basis. What else happened is we were looking yesterday, what was this pattern going to do? I had pointed out, I'm sure, the high, the low, which way is it going to break out of there? It's attempting to break out to the downside at this point. If the market has legs to it, will it be challenging this area? That's going to be the big question that we all are going to ask now. But at this point, I see the trend is down. You've got lower highs, lower lows. If you look at the 18-day average, this is the first test of it since back here. So the market's got a little bit of about a week and a half where it hasn't tested it. So that's going to be interesting. Because it finished at 862 3/4 under the 18-day average, the trend is down as the swing line defines it. The bias is down. In terms of the Bollinger Bands, well, they're way up here for resistance at 907 and way down here for 820.5 for support. Doesn't mean you have to go to them. Then we take a look at what the slow stochastics are doing. That's the momentum oscillator. It's rolled to the downside. I think you can see that pretty clearly right here. So at this point, I think the bears grabbed control. I think they lose it if you get back over 892.5, and it wouldn't surprise me if the market has any legs that in the 850 to 828 zone, the market makes a run. Now, the meal market's a little different. Even though the trend is down because you have lower highs and lower lows, you're over the 18-day average. So I'm looking for the first support to come in right here against that number. And frankly, the secondary support's at the 305.70. I don't see this chart as looking as bearish as the soybeans at this time. The soy oil failed. All it did, if you take an overall look, this is a market that was up here at 36, 37, came all the way down into these 20s, got a bounce back to the 18-day average and failed. It got itself yesterday into an overbought area. You see this number where the red is? 69.16, 70's overbought. So you were right there. Anything up today would have been a problem, and it pulled back, but it pulled back so much that it got under 26.23, which broke the uptrend. Are you trending? No. You're just sort of drifting in this market. In the corn market, you've been in a downtrend, but it's dangerous right here. You are very oversold. You've got a market that's here in the one reading's 15, the other 22. They're not embedded. They can't get embedded this week, so it's just an oversold condition. Does it have the power to make a run to the lower Bollinger Band? I don't know. But 332 or so was the last break low, so you're knocking on the door of that right now. In the wheat market, big important numbers. You rolled over in the momentum. So you've got the lower highs, lower lows. The trend is down. However, the bias is up because you're over the 18-day average and you've just lost your upside momentum. The chart's a mess, but overall, I wouldn't be surprised if it does break to get back into this 543, 537.5 and see if the market tries to figure out what to do from there. Sugar continues to just rock to the downside. It's gone straight from 1168 back down today to 1002. It's just a straight down market. Part of the problem is ethanol. There's no demand for it at this point. So any sugar that you're using to make ethanol with, or corn for that matter, people aren't driving. So you're just producing a product that nobody needs at this point in time. Hate to say it, but that's how it looks. In the coffee market, you finally stepped away from the uptrend. Now, if we go back to how I was talking yesterday, we had a pattern of higher lows and higher highs. I said the danger is if you took out 115, 65, that would now turn the market, if you didn't first get back over right here, this high, into lower highs, lower low. But the question is, you turn bearish if you get a settlement under the 18. You didn't do it. So you're neutral right here. Any settlement under that 18, I think, turns the market into a bear move. In the cattle market, you went back to bearishness today. Lower highs, and this low is under that one, and you're under the 18-day average. To negate the downtrend, the market has to get back over 92.07.5. If it has legs to the downside, look for the 83.70 as a possible target, the lower Bollinger Band. The hog market was limit down again, just falling. I read today a story, too, that in China they found another truckload of pigs coming in. And guess what? African swine fever. It's the second one they've caught in about a week or so. I don't understand why the government can't just crack down on these small farmers that are doing this, but they've got to do something. These diseases, if they spread, will hurt their population, their hog population. It's not going to help them in any way get to where they're going. I created a special report today, and I did it on stock indices, Fibonacci numbers, for those of you that are looking for something like that. Go to our website at www.iraepstein.com. Under the word research, you'll see it there. Enjoy it. I'm Ira. You have a good day.